TCS reported the first quarter numbers on Friday post-market hours. You were with us when we were dissecting those numbers, and the revenue may have missed the mark ever so slightly, but on that base, you would argue that that's largely in line. Very strong performance in EBITDA beat. A lot of cost optimization, I believe, would have gone into that. But the call at the end of FY24 is, how does Mr. Krithivasan see what's going to happen over the course of the next 12 to 24 months, if in the current scenario, it is possible to crystal ball gaze that. Thanks so much for speaking to us, Mr. Krithivasan.
Sure.
Let's talk about maybe not just the last quarter, but the last 3 or 4 quarters as well. And I'm just trying to understand if it is possible to predict. Your industry has been known for being able to predict things so well. In a situation in such a state of flux, is it even possible to kind of crystal ball gaze?
At least from our perspective, Niraj, we don't want to hazard a guess at this time. There is a lot of volatilities. As we keep saying, on one hand, there's a lot of new technology coming in. Our customers do want to invest in those technologies, use them for transformative purposes. At the same time, no one understands the economics, where it is going, and they also want to be ready for a rainy day. So that is making them also pull back on some of the committed expenses, previously committed expenses or investments. So these two things are at play. And there are instances where they also take very, very short-term decisions, right? That's the reason that we are not wanting to call out anything on a immediate term. We've been saying, looking at you talked about the whole year. Like whole year, I think we had a strong order book win of upwards of 40 billion. So looking at the sustained order book win and customer conversations, we believe medium to long term, we are quite optimistic and positive. And we kept saying that FY25 would be better than FY24. But difficult to predict on the short term. I don't think it's meaningful.
Can imagine. It's difficult to sit in the chair that you are sitting on for sure, but in the current circumstance. But for the quarter, I mean, the revenue, I wouldn't call it a miss, but for lack of a better argument, let's call it a miss relative to what was estimated and the Bloomberg estimates. Is that because of these reasons that you cited, the macro being what it is and client decision being slow?
Yeah, like when we started the quarter, we were expecting another 50 to 70, 100 basis point more on the revenue side. That's primarily coming from the major markets. We were expecting more growth to come from North America and Europe, which did not happen. But we are able to compensate quite a bit by focusing more on the regional markets as much as we can. So you could see that our diversification playing it off. But that's primarily the reason. Like in US, there are enough uncertainties, like elections are coming up. People don't know which way the elections would go and what would be the policy changes because of the elections. That's also causing an issue.
So when I was looking at macro indicators in the last 1 month, of course, independent of whether rate cuts happen or no, there's some bit of PMI uptick coming in, and one would want to believe that might lead clients to be more confident. But I hear you say that in the US, the election is also as big a factor. What's the sense? You may not be right at the end of it because no one knows, as you said, but what's the sense? Could this economic tailwinds or green shoots result in better spends, or would NA be impacted by these uncertainty around elections until November?
So, see, if you disregard the election for a moment, okay, like you said, and we also been seeing the fundamentals have been good for not this quarter, like for a couple of quarters, and I feel some people are waiting for a recession to happen, which is not happening. But everyone in the back of the mind think that consumer spending should reduce over a period of time, and which is causing that worry. And but like you said, even in the current quarter, if you look at all the macro indicators, they are all looking positive. So my view is, disregarding the election, there should be a uptick in the medium term. But elections, and the outcome of that could go anywhere, right?
Okay. So your optimism around FY25 results from not what happens in North America or Europe, But the other geographies, because you have said that FY25 will be better.
No, our optimism comes primarily from our strong order book. Our customers have been willing to sign large deals. Okay, there would be yes, there are pullbacks, there are some old programs that get paused or cancelled, but it's fine. But we believe that considering the size of the order book, okay, it should eventually drive our growth. Maybe not this quarter, maybe, but sooner than later that growth should come in. And based on the conversations we've been having, see, for a large part, though we talk a lot about macroeconomics on why customers are spending, we believe that whether it's a economy that's up or down, there are enough opportunities for organizations. Like if the customers are focused on conserving or cash, we have to go to them with solutions around cost optimization. And if they are interested in transformation, we'll go to them with more transformation opportunities. So by and large, we have a strong suite of portfolio of offering with which we'll go to the customer. And my optimism comes primarily from our TCV. I don't want to use the macro as the excuse for growth or lack of it.
Okay, fair call. May I play the devil's advocate though, sir? And the question is this, that your TCV, yes, has done remarkably well. I mean, these deals that you won are spectacular, but it's not that was too much under question even in the last 12 months, right? You had an order book which was decent, and yet the numbers relative to what history is shown, recent history is shown, were slightly below. So what is to say that despite this TCV, the growth will be better than FY24?
Yeah. So two things, right? What we see is some of the old programs have been reprioritized. I believe like last 4 quarters, as much of reprioritization has happened, and what is still being executed, I'm assuming these are all the programs that really mark the threshold, and customers want to continue.
Okay.
And so over a period of time, if some programs are not that have to be canned, I'm assuming most of them would have been canned by now. The second factor is how much of the conversion we are seeing from the recently won order book. The conversion from the recently won order book is quite healthy. It is not much less compared to previous years. We are seeing the recently won projects, most of them are yielding revenue based on the same historical level. So these two factors coupled with, we believe the growth should return. The drag from the old programs getting cancelled should reduce.
Which is great. I read in one of the notes, and maybe they quoted you from whichever way, that you are hopeful of BFSI, which was maybe a bit of a drag this quarter. Pent-up demand from BFSI to come back in FY25?
Definitely. They see BFSI is first, it's huge too.
It's a giant.
And it's one of the earliest adopters of technology, even in the old days, even today. So there is technology debt in BFSI is humongous. Particularly if you take sectors like consumer banking or insurance, there's a huge amount of technology debt. So there is a technology debt that has to be resolved. Okay, and then they have to invest on new technology. So there is a lot of pent-up demand, and it would return. When it returns to growth, it will really come back strongly. So I am confident, but again, it's a question of time. But it will come back.
But you reckon it's difficult to time these things, right? Per se. Absolutely. It's a question of time, but whether it happens quarter 2, quarter 3,
it depends a lot on market sentiments also. Confidence our clients have on whether they're ready to spend or how much they have to spend on new transformative programs.
Okay, and that can happen independent of the elections as well, you reckon?
It has to happen. Elections can delay things by a quarter or two, but it will happen. See, I was talking to our UK head, our UK head said, UK also has very similar macroeconomic uncertainties, but there people have sort of come to a conclusion that this is how life is going to be. Let's take decisions and move on. Right? In US also, at some point of time, people will get used to the overall macroeconomic uncertainty and take those decisions.
I have one more question. You've now lived with geopolitical uncertainty, the world, for the last 18 months at the very least. It's only getting exacerbated in some fashion. How are client conversations with regards to what geopolitics can do to business decision making? Is that coming in a large way in conversations?
It's coming as not direct impact for technology services, but more as a indirect, like what could happen to the supply chain, what can happen to the manufacturing, what can happen to retail, other industries, and because of the impact that they would have, how it would impact the IT spending. Right, that conversation, there is uncertainty and nervousness among people, or because, like you said, we've been living with this for 18 months. Like when it started, you didn't expect them to live with these things for 18 months.
That's true. That's true. Okay, just one more thing on the deal. On deals. The deal wins have been spectacular. Just for namesake, Aviva is a landmark deal of sorts. But just 12 months ago, I was listening to conversations about how large multi-year deals are becoming fewer and fewer, and people are doing 12-month, less than a year deals, smaller deals, run the business kind of a deals. So would deals like this Aviva deal be few and far in between, or do you sense that these could pick up?
What the size of Aviva, those deals will not be, you don't expect it, they never say, they'll be lumpy. There won't be any cadence. Like they happen once or twice a year, they don't happen that often.
Exactly.
But deals that span few million, few hundreds of millions dollars, that keep happening, like almost. See, this is really big, but the other large deals keep happening.
They'll keep on happening.
And we've been seeing our deal tenure also has not drastically changed. Yes, there is a great percentage of short-term deals which are really good, like because we like them. Like your small deals, you convert them into cash revenue very quickly. We do like them, but I don't see there's a drastic change, but we are never expecting mega deals to keep happening every quarter anyway.
Got it. Okay. Now I'm just again reference back to what's happened over the last 3 years. 2022, people couldn't get enough of what tech sector is doing. The world is digitizing. You will have employee problems, and business will never go out of fashion. To suddenly fast forward 2024, and suddenly people are raising question marks around the whole business. So my not really large question marks about the pace of growth. Let me put it that way. Would you view this as a cyclical turn which will at some point of time turn? Because I suddenly hear people talk about two things. One, the unpredictability of IT services because of what AI could do. And of course, there are counter arguments saying that IT services will adopt AI to improve. And two, that attrition, which used to be a big problem during those post-COVID period, will not be a problem anymore because efficiency and AI will ensure that IT services will not have the attrition problem at the very least. Your thoughts on both of these?
See, our thoughts on generative AI has always been that this is a great technology and great tool in our hands, and it will enable two things, like introduce new products and services, create new products and services which are not thought of so far, and second side is also bring in more productivity. So to couple with this, we believe the overall pie will increase. Like though productivity will also increase, but the addressable space or the pie of our pie will increase in size. Net, we believe that we are going to still need more people. Maybe the capabilities, the training that we need to provide could change, but we don't see a shrinkage in the amount of volume of work that needs to be done. Net, it's going to be positive. And I don't think generative AI by itself is going to have a major role on increase or decreasing the attrition. It is cyclical by nature. It's more to do with the overall demand in the market. If overall demand in the market doesn't change, that's my theory. Like
sure.
So attrition also should not. Yes, there'll always be what you saw in FY22 was anomalous. Right, but other than that, if you disregard FY22, maybe the same situation happened maybe 5-6 years ago. Like there was again uptick in attrition that might probably keep happening once in 5-6 years. That will manage.
Okay, and non-attrition AI and what it could do to the IT services business. Any thoughts here? How capable is Indian IT? I mean, not just TCS. Wear the hat of the captain of Indian IT space and tell me about it.
No, but look at that world over. Like take the AI space or the tech sector. Indians are very, very prominent. Like nowadays, we go for any meetings on either side, you find a lot of Indians. So
Sure.
the talent available in India is very, very deep and broad. So India will play a phenomenal role and great opportunity. And within India also, with the Indian economy growing at a great speed, there's currently, like if I look at generative AI is only deployed in some sectors in India, and also given the diversity of our population, we are only addressing a very, very small subsegment. If you are able to, first of all, go into all languages, go into tier 2, tier 1, tier 3 cities, what are the applicability of generative AI? Opportunities are enormous.
Okay, and you reckon? I mean, again, I don't know whether you can call it right or wrong, but let's assume that Indian IT service companies may not have optically had a stranglehold on AI capabilities. Optically, I'm saying, and I may be wrong here. I'm just trying to understand from you. You reckon that AI will not be disruptive, but more enable you to gain more business for you to be able to serve your customers better?
See, traditionally, we've not been maybe it's a question of how capabilities or each country evolves. We have not been a great product country. Like, we've been a services organization. So, but it's increasing. More and more enterprises are coming up that create more products, and so our adoption of, while we may not have created the LLMs on our own,
Sure.
but the ability to use the LLMs and create new services out of that, I think there are enough companies doing it. Like large companies like TCS do. There are many startups that do the same thing. So I'm not too worried whether the LLMs are created in this country or not.
Okay, but there will be enough business for companies who are not creating the product but driving the usage of the product as well.
That's been traditionally our strength, and we would continue to ride that wave.
Got it. Last couple of questions. One is on the strong point for the quarter, which is the EBITDA margins that you had, and how do you reckon? Cost optimization, so on and so forth. Do you reckon this will be the new normal of sorts, or is it difficult to call that?
No, for us, actually, if you look at for TCS, it's always been a very important driving factor. Like, we always believed that we have to grow, and we should be able to grow with strong margin. And for us, the strength has been execution on the ground. We continue to look for opportunities for improving the efficiency. We will continue to do that, and I don't believe that we have to stop at 26, or we have to see. We started this year with around when Q1 was somewhere around 23.2. So we've been able to improve almost 100 bips every quarter. I'm not saying that we will be able to do 100 bips every quarter going forward, but definitely there is headroom left, and we will continue to target the headroom.
Great. Well, I personally wish you all the best for that and more. Thanks so much for speaking to us today, and have a superb FY25.
Thank you, Niraj.
Pleasure was ours, and viewers, thanks for tuning in.